Hey everyone, welcome to the Industry Show. I'm your host, Nitin Bajaj, and joining me today is Grant Van Cleve. Grant, welcome on the show.
Thanks, Nitin. It's a pleasure to be here.
Pleasure is all ours. So let's start with who is Grant?
Well, I am a guy who loves the startup phase of activities. I invest in startups. I love to get new activities going. I love to get people excited about something new, an opportunity to change something. But the opposite is I get bored if I stay with something too long.
Yeah, and you're not the one to be grounded. You're not the one to be held on to something for too long. Right? All good
Exactly.
stuff. So now that we know a little bit about you, let's play a little game about some of these themes and areas that impact us pretty much on a daily basis. We call this the underrated, overrated game. So let's start with startup valuations.
Overrated.
Okay. What about stock market prices?
Getting close to where they should be. They've been overrated, but this correction was probably needed.
Real estate.
Probably overrated based on lower cap rates. So some adjustment needed there too.
Okay. What about metaverse?
Ooh, good question. Short run, still overrated. Long run, there's something there.
Okay.
Not sure I'm thrilled about it, but I think it's going to grow as a space.
Yeah. I'll follow up with crypto on that.
My opinions are changing. I would have said overrated until a couple of weeks ago, and I've been studying further at people's suggestion, and I'm getting more bullish. So it might even be underrated.
Okay, I'm curious now. What about NFTs?
NFTs as a concept are a growth space. As they're currently being used and priced, they're probably overrated.
Okay.
But that idea of digitizing assets and using smart contracts to allow the sale of them, that's a real thing.
Yeah. What about inflation?
Well, overrated, underrated, how do I answer that? It is a problem. It is not going to go away fast, but it's probably peaking. So could be getting better.
And what about cash?
Oh, I am heavier on cash than usual at the moment. So
yeah,
there's value in that, even with the inflation. Inflation's bad, but it's probably lower than the corrections on other fronts.
Okay, and then the last one is the Great Resignation.
Underrated. I think it's a real thing. Yeah, or maybe it is being priced in there, but yeah, people aren't going to go back to what they did before.
Yeah, well, that was fun. Thanks for playing along, Grant. The game is supposed to be fun, but it didn't seem as fun. But
I like those.
So now, let's come back to something closer to you. I know you do a lot of things. You've been around, you've got tremendous experience. It sounds to me like Hangar 75 is getting more of your attention now. So tell us a little more about that. What is the mission? What is the size and scale of operations? And most importantly, why do you do this?
Okay, so quickly, Hangar 75 is, to use a baseball metaphor, if you follow that, it's a Moneyball approach to angel investing. So angel investing is higher risk, higher return, which would be closer to the baseball idea of swinging for the fences. So the same one who hits a lot of home runs also hits a lot of strikeouts. So Hangar 75 is trying to get more predictable returns through good execution, through more predictable results, and through corporate tuck-in, trying to find a destination for companies that we're building. So Yeah, we're taking ideas. Some of those ideas are ones that we have and we're just executing on them. Some of those are ones that we're taking ideas off the market where maybe the idea is better than the founder,
Mhm.
which sounds bad. I love founders. I love believing in them, love stimulating them, but sometimes you find people that have identified a market need but really are not going to be great entrepreneurs. So we execute for them in exchange for, the majority of the company.
Mhm. True. And it's all about the execution at the end of the day, right?
Yep. Yep. And it's my motivation for getting involved in that was that I saw lots of great investors. I mean, great entrepreneurs that I had found to be great investments. Even if they didn't work, I still think they were the good ones. But there's others that my intuition early told me that the person wasn't going to be able to get that thing to its destination, but you sort of believed in it, hoping that maybe you were wrong or that maybe you could fix it as investors over time with new teammates and things. And I think there's a category. I don't want to be someone that if you're a hammer, everything looks like a nail. So I'm trying to take companies out of founders' hands. I know majority of things I do are investing in them and
Mhm.
letting them run with it. But sometimes we've got to need some to take off, and that's for Hangar 75. And my partner, Ian Wilding, he's came from an agency background and he has executed great projects for clients that ended up being extremely strategic for them, produced game-changing new products that that were valued. I mean, he was appreciated agency, but he realized that clients were making a lot more money off it than he was. And if instead you could do that from a venture perspective to execute well on something, you could solve things for corporations. So he wanted to drift into the venture world. I wanted to drift a little bit into the execution world around products. So we created this venture studio.
That's an amazing partnership, it sounds like. So you both get more of what you want to do, and you have the other person to take care of the other side that you may not want as much. That's awesome.
Exactly.
So give us a sense of the size and scale, the kind of companies you invest in, the amount you would typically invest, and the size of the portfolio.
So starting with the size, we currently have 5 companies in the hangar. The hangar is not actually a physical space. It's a metaphor of going inside and producing everything, and then the plane takes off ready for market. So, and long run, we'd probably like to have about 10 a year. So, and they're cycling out on a regular basis because we're trying to build. So that goes back to that middle question, what are we actually looking for? And we're trying to find companies that, or ideas that can be built with $500,000 or less and can find an exit within a couple of years and don't have regulatory approval or things like that. So, and ones that we or the founder who created it can have an idea of who the destination, who the potential acquirer could be, and we'd be building to suit for them, and they'd even be pilot customers. So it's a narrower set of things. It's not just that we want to execute better or we want to take certain things, that we'd only take ones that fit those requirements. But it makes a big difference to be able to build it effectively, efficiently, and already be flirting with the one who will hopefully buy it from you.
Makes sense. And, is there a certain geography you're restricting yourself to?
No. But I say that with sort of a no in quotes.
Yeah.
So both Ian and myself are here in Southern California, and a lot of our connections are here, both investors and founders we run into. But his agency that he created is London-based and is actually even global from there. We are flirting with ideas from other places. So we're not bound to Southern California. But I mean, there's something important about relationships. I'm not sure great companies are going to be fully remote, long run. You need some kind of a core. So no-ish. We aren't geographically limited.
Makes sense. Now, as you work across this cross section, but also kind of pick that niche, there are obviously benefits and issues. What's the one big challenge you're facing?
One big challenge. So the challenge that I wake up to and think about at the moment is that 1 out of those 5 is a hardware item, and we're having supply chain issues. COVID, headwinds instead of tailwinds. A couple of the others have tailwinds. So that's a specific thing. We have to be able to price that product effectively and deliver it efficiently. And we're not sure we can. So that slows it down. Or we're not sure we can at the moment. We are very bullish long run, actually. Overall, it's sort of, maybe this is a little bit more esoteric, but we're thinking through funding methodologies where I come from an angel background where a group of people all get inspired together and each put in a little bit to get it forward. And we're used to a lot of independence. A lot of people who like to invest in angel things aren't big on investing in funds. But a lot of people said, I like what you're doing. I get the idea of a assembly line of deals that they don't have to be superstars, but each of them are fairly, or a good portion of them are successful. I don't want to pay attention to each of them. Why don't you create a fund? So we're sort of debating right now at this moment about whether to create a fund instead of have individual investments in each of our deals. So those things aren't clear when you invent something from scratch. They're the investment vehicle associated with the product or the methodology is something you have to sort out, and experimentation will help us get there.
True. And I think there may be a lot of confidence coming into investing with you and knowing that you are overseeing that instead of the money going directly into a company where that relationship may not exist. Right? You're a pretty big mover and shaker in the Southern California investing industry. So let's not play that down, right? That comes with a lot of insight, wisdom, and experience. So I can tell why people may be more comfortable investing in a fund.
Interesting. That's a very good insight. I thought it was just practically, no, I don't want to be bothered, but maybe it is, ultimately it is a relationship trust step here more than a product step. So thank you for that encouragement.
Now, on the flip side of the challenge is opportunities. And when you look at the landscape, within the 5 companies, but also Southern California and the ecosystem here, what's the biggest opportunity you're targeting?
Biggest. So those are probably separate questions. So individually, I am like within the hangar, one of the companies called Trust Olive has a real estate multifamily apartment angle to it, which has gotten me quite excited. And I think that there's an expansion on multifamily from a real estate perspective. So that I've made money on multifamily deals. I'm really excited about the niche here. And some of our co-investors actually helped us find a way we could reorganize. We won't have time to go into the premise of the company, but there was a pivot of a different stakeholder we hadn't even understood. And I think it creates a much bigger potential. So I'm excited about that one quite a bit. Overall, I'm also just listening in on trends as a whole. So, you talked about whether the Great Resignation, what is work from home, what is education from home, what is medical delivery from a distance, what are some real changes. This is not a status quo era. So I'm enjoying studying things, doing a lot of reading, expecting interesting ideas to come through the pipeline. And then practically, I've also taken the step, I've gotten involved in starting a software coding school for a particular part of the world, which there's remote, but it's also linked to lifestyle, digital nomad things about you could live anywhere. Where do you live for lifestyle reasons? But you could get trained to do work for people in other places. And I think that's going to create some changes as well. So we actually got the license for a great ed tech tool for 14 countries of Eastern Europe. So outside of all of this, there's being temporarily entrepreneurial of actually starting something myself with a few people, and hopefully it gets rolling and I can be the startup guy and not the operator.
That is so cool. And, we'll do a separate session just on that as soon as it's,
it's
you have some
interesting.
time to breathe. Yeah, I would love to hear more. EdTech is something that's close to my heart. And I would love to have a separate conversation on that. So as you look at there's a lot going on right now, but as you look at the rear view mirror and you look at, things that may have worked out and things that didn't work out as you had expected. I would love to hear an example on both sides, a success story, but also a lesson learned.
Sure. I'm going to cheat a little bit on my answer there. In some ways, combine them because there was a failure that ended up becoming a success. And it's actually not from the tech world as much. Come to think of it, it's more another startup business I'm involved in another developing world country, and helped a friend get a cafe and a small restaurant going, and a great location. We just thought it was going to, everybody'd love it. And they didn't. I don't know if we didn't execute it well, or if it wasn't the location we thought it was, or I don't know, but it wasn't as successful as we thought. We thought that was a real negative venture. But along the way, we built a lot of relationships, and one of those in the neighborhood, people who came there, and one of those people who came there had a deep medical problem. We ended up helping him with his medical problem. And then afterwards, turns out he was all alone in his family, and we were the only people that ever helped him. And he ended up letting us have access to a real estate deal, which ended up transformative, an amazing real estate project. So some pivoting, some focus on people, there's some things wrapped in there together it's good to just have a story of a mistake and it just blew the whole thing off out of the water. But in this case, thankfully, in the middle, maybe it's not even a pivot. It's just keeping your ear open for opportunities that happen. I even think of Tech Coast Angels, which I'm a member, the deal we might be known best for. We've actually had higher multiples on other deals since, but this one really put us on the radar, was Green Dot. And we invested, it was before my time, but the group invested in something very different than what ended up being successful. And it was at the very last board meeting before declaring insolvency and going, that a new idea came out, said we could do something totally different with the tech one day. And the board member said, wait, that's a good idea. And then the board member said, I'll fund that, experimenting for 6 months. And it ended up becoming a $1 billion business relatively soon after that. So there's something to be said for experimenting, thinking, wondering if using resources you have for even something else.
So true. I love those stories. And what I love the most is having that person who can be that mentor, that guide, that support system for you to go dream, experiment, and to say that, hey, it's okay to fail, right? But just try it. And if you don't try it, none of these things would come to fruition. So that's so important. I wanted to highlight that real quick.
Yeah. And I would actually, that room to fail. Yeah. I think that's you're sort of describing it in a ongoing coaching and, that relationship, this was an example of that. But that's also part of the reason that I enjoy being a pre-seed investor. And I'm even like a pre-seed. I'm the one that writes the check when nobody else will. And it doesn't mean everything. I'm not just a back of a napkin at a cocktail party, you fund something, but somebody I've been working with, trying to get them introductions, trying to give them advice, coaching, paying it forward. And for some reason, it's not sticking. Nobody else is investing in it. But I'm like, I think there's potential here still. And I write the first check, and then they still can't get it. I write the second check, write the third check. And so I've got 3 deals, one of which is about to totally explode, one which is revenuing a lot of money, has great dividends, and then a third that is still precarious, but it might change the world. And they were all one where you believed and gave them room to fail, and you didn't let the red flags get in the way. You said, let's give this a whirl. Let's see if something could come out of it. High risk, high return.
True. And again, it takes a lot, and it means a lot for, someone to be out there, being that support system, building that confidence, sharing that wisdom, sharing those learnings, so people can learn from it. And at the end of the day, the business might fail, but you're building a person, you're building a relationship, I think, which is which goes a long way, right? The businesses will go up and down, and there will be transitions through, but how you make a person feel and how you help them learn, grow, and scale is something that remains for the longer term.
That's a good word, really good word. And I'm actually thinking of one of these that I wasn't the only one that believed in this guy. There were a handful of us, and then we had a investment that if there was a milestone that we'd invest up until this thing, and it was a relatively fast, and if you got to it, then your valuation would be here. If you didn't, then the valuation would be knocked down as sort of a penalty. They said, okay. And everybody but me, when they got to that milestone, didn't meet it. They said, well, you failed. The valuation gets knocked down and I'm out of here. I'm not investing again. And I thought, wow, you got 90% of the way to your milestone. A lot's happened since then, and I'm alone. So yeah, you won't always have people that agree with the importance of what you were saying earlier about that encouragement, that room to grow.
So this brings us to my favorite part of the show. We call it the one-line life lessons.
Okay.
These are not quotes, but lessons that you've either adopted or come up with, and they've been instrumental in changing your life or having been a part of your life in how you conduct yourself personally, professionally. And we would love to hear some of your one-line life lessons.
Okay. Well, interesting. Yeah, I have a couple of proverbs that I've wrote down that I've got. I love to travel. I've lived in a number of countries, and so enjoy insights from other cultures. But one of them is a little closer to home, but an English proverb, which reminds me of this last one. It says that danger and delight grow on the same stalk.
Nice.
That can be a little bit of sort of a yin-yang philosophical statement, but I think it has a lot to do with us from an investment perspective. That's, if you want to get to those delights, whether it's the return or the privilege of having changed the world or the joy of looking back, you believed in somebody, you've got to have to embrace the danger that goes with it. Then related to that, another one I heard, one of my favorite biographies about a guy named Jim Elliot, who did some work in the jungles of South America. This isn't related to his work there, but he said, life is like riding a bicycle. If you're coasting, you're going downhill. If you don't have to pedal, that means you're actually, that's important to me, reach a certain level of financial abilities or personal experiences or whatever, that you could just rest on the laurels and seek passive returns and not risk. But I think if you're coasting, if you're just surviving it, or even you're getting some kind of return, but you're not putting into that personal growth, that risk, that finding out what's happening in the world and building something, where the hockey puck's going and moving towards. If you got all that takes work in it. Even Warren Buffett, I don't know if you heard that. I heard he reads a book a week.
Yes.
All the time. So he can be this oracle from Omaha that seems to be so casual and just have simple advice, but it's not. It's informed by a lot of things. So, and maybe so related to that. So you danger and delight, also coast, not letting yourself coast. But someone said, and I couldn't remember where I heard it from. It said, you haven't started living until you found something worth dying for.
Yes.
Now, there's a side of that that's a little bit scary. We're concerned about, intolerant behaviors or fanatical martyrdom or something like that. But I'm not afraid of that part. I'm afraid of mediocrity, of just doing what other people do, drifting along, finding something that's temporarily satisfying, but not something that I'm passionate about. So there's not something you're waking up in the morning saying, I'm contributing and I'm all in for that, whatever the cost. And that's foundational for entrepreneurship. But I think it's a good countermeasure to the overemphasis on safe spaces or, the only thing we're intolerant, about is intolerance. We're so emphasizing everybody getting along that we're not actually having conviction. It's not appropriate to have a conviction about something. And I think a lot of the people that have changed the world have come with deep commitment and sacrifice around something they feel conviction about. And I think it'd be good for us as a society to continue to affirm that. So yeah, I mean, those I've got lots of other fun little proverbs, but I think those kind of connect together in a way that would undergird my passion for action, passion for conviction, belief in people who are acting like that, who are doing the sacrificial thing that leads to dramatic outcomes. Even my kids, there's a book I had them read called Do Hard Things.
Mm-hmm.
That's it. That's the title. But don't find something, grab the bull by the horns and go for it. And so it's a great perspective on us, both as from an entrepreneurial perspective and from an investor perspective.
Love that. Thank you, Grant, for sharing those one-line life lessons. For our audience, we have an entire collection at onelinelifelessons.com, and you will find Grant's lessons on there pretty soon. Grant, thank you once again for sharing your journey with us. Thank you for doing what you do, for being who you are, and supporting this entrepreneurial community. We really appreciate it. And we will stay in touch, and we'll bring you back on with your entrepreneurial hat on. Would love to learn more what's going on in the EdTech space. Thank you.
Okay. All right. Well, I love the interaction. Appreciate the questions and your own contribution to it, Nathan.
Thank you so much.